Hey everybody, Jake here at TrendSpider to go over the weekend video, and what a wacky week it was. So we'll go over the broad markets and then go over some individual names, and we'll even touch on crypto for this week because crypto did have some really strong reversals. So starting out with SPY, a really nice reversal on Friday, and really the main thing that you wanted to look for on the shorter term time frame for SPY was the 65-minute divergence on the percent range. So that was something that really kind of told me that we could be really reversing into really, I guess, like early morning to midday in the market. And all you needed to do was look at this divergence. Now, it's not a big divergence here. It's not incredibly visible, but it is mathematical. So what I mean by that is, if you look at the individual numbers here, you'll see that this is negative 99.73. You can see it in the little top left corner of the Williams percent range. Then go to this bottom here, it's negative 96. Then go to this bottom here, it's negative 95. So this was mathematical divergence, meaning that we were hitting higher lows on the Williams percent range. It just wasn't that obvious. Now, if you turn on the RSI, which we have here, you'll see that we also had it here as well. So all in all, definitely divergence that was signaling possibly a reversal. But then if you look at the daily chart, we have that same type of setup here on the longer term time frame. So to me, this is telling me that we could continue up next week. Now, we have to take price action into account and kind of go from there. But a really nice reversal. We've got this divergence on both the RSI and the percent range. And once again, you can't really see it that well in the percent range visually, but all of these numbers are actually showing divergence mathematically. So just keep that in mind, that this is something that you want to look at when looking at overextended markets to the upside or the downside. And if we scroll back, you'll see here that the last few times we have had divergence with the percent range, these have been very meaningful bottoms. So back in September of 2020, back in late October of 2020, back here in February and March of 2021, these all showed divergence with the Williams percent range. We're using the percent R10 because we're looking back 2 weeks. So if this does play out similar to the other times that we've had divergence, this is going to be possibly a pretty big move to the upside, and we may see some panic buying into the week ahead. Now, on top of the divergence on the percent range, we also have the divergence on the RSI. So that kind of gives me even more conviction in an upside move into the coming week. And you'll see here on the weekly chart, we actually still closed within this zone. We did wick below it, but we actually closed right at this longer term weekly trend line. So all in all, we always have to follow price action. Sure, it was a great day. We want to get excited, but we have to wait until price action confirms. For me, we would really want to break above these highs here. Let's say right around 436.50 to 437. And then if we did that, I think we could fill the gap above, which is shown by this orange area. So SPY looking very strong into the week ahead. We will let price action determine if that's truly a bottom next week. But if you look at the Qs, you'll see something very similar, right? You've got only really 3 times over the last 18 months where we had the RSI 10 this oversold. So you can see here, initially this happened in February of 2020. It marked a short-term bottom. It didn't mark a longer-term bottom as we continued to move down, but that was a historic crash. If we're not in, the business of going into another historic crash, we are definitely at a low point here that we've experienced in the past. And this has yielded some pretty big reversals to the upside after this RSI has gotten this oversold. You can see the percent range is also starting to tick up here as well. Now, on the weekly side of things, we are holding the May lows still. So you can see here I've anchored a VWAP from both of these candles here that created these May lows, pretty much almost a double bottom. And you can see that we did bounce right at the key level. And we'll have to see what happens next week. But this is the 4th red week in a row. The Qs generally do not have more than 4 or 5 red weeks in a row without some type of relief bounce. So let's see how that plays out into the coming week. Next one is IWM. IWM is one that definitely continues to really not do anything. We're really going to have a status quo change below this support line or support zone, or above this resistance zone. Until then, we're possibly going to just chop until we get to the apex of this symmetrical triangle. So for now, a pretty strong close on Friday. We'll have to see how that plays out into the coming week. And then if we look at the weekly chart, you'll see here if we anchored the volume by price, pretty much the same chart we've been looking at now for literally like 8 months, we did close right above that point of control. The point of control is just the largest volume node when you're using the volume by price. And you can see here that we pretty much closed right at it. And until we really break above this longer term level of the resistance zone and support zone, we're stuck, and we have a lot longer to go until we get to the apex of this very, very gradual symmetrical triangle. So you can see we have the symmetrical triangle here on the daily, but we also have one forming on the weekly as well. And we'll just see what happens. And just keep in mind, if you look at the seasonality, IWM does have some pretty strong seasonality going into the end of the year. So if you click seasonality on TrendSpider and we go back, let's say since pretty much the financial crisis lows, you'll see here that we have a pretty strong uptick for October and November. November has a 92% win rate. So that means over the last 13 years, 92% of the time, November has closed higher than October's close. So some very strong seasonality that we are entering here into the end of the year. And you can see here that both November and December are historically very strong times of the year for IWM. So keep that in mind. We do have the technical setup. Now we just need to actually get price action to confirm that breakout if we do have it. Now moving on to Bitcoin and Ethereum. Bitcoin was really the reason why you shouldn't have been too worried about the market, because Bitcoin really is a great risk on, risk off indicator for the broad markets. The fact that Bitcoin was not breaking down and we were holding and actually continued to have a pretty big spike into Friday morning, that was kind of a sign that the markets probably don't have much more room to move down. You can see here that Bitcoin really moved up very strong. And I did this video on Friday, so we'll see how this plays out into the end of the week for Bitcoin, which ends on Sunday. But all in all, some new highs being created from last week's high. So we did break above last week's high. We broke out of this this daily falling wedge. And the area of interest above would just be this previous high, and that's right around 53K. So if you look at the raindrop chart, you will see that there's quite a bit of volume at the top of the range here. So you'll see this bulge of volume. There's a lot of volume aggregating here, which could suggest a continuation into the weekend. You've got kind of a lot of euphoria into the weekend with the markets finally reversing. So we'll just have to see if we can break that 50K psychological barrier first before we really consider this previous high from September 5th. Now going into Ethereum, Ethereum is just an absolutely beautiful chart. So on the weekly, that's kind of the main thing that I'm looking at here. And you'll also see the seasonality for November, December increases for Ethereum pretty much since 2016. So you'll see November and December both have increasing win rates. So I will kind of get rid of that so we can see a better view of the chart. And you'll see here that Ethereum is just starting to break out. And as I mentioned, I did this video right after close on Friday. So this probably is going to look very different by the time some are watching it on Saturday or Sunday. But notice that we are starting to break out that falling wedge. It does look like Bitcoin may be leading versus Ethereum in regards to, the breakout through the falling wedge resistance. But just look at that ascending triangle, just an absolutely beautiful ascending triangle, perfect bounce. Nice candle for the week so far. Remember, we do have time left in the week, so this could definitely change. But for now, it is looking very strong, and we just have to kind of go with what the price action is telling us at this current moment. Now, going into some individual names, PENN is one that just had an absolutely massive Friday. You can see that we have a volume-backed breakout here. So we have the volume increasing with this symmetrical triangle breakout. You can see that we also broke above this swing high anchored VWAP with volume above that anchored VWAP. And then the main thing to keep an eye on is really the volume by price from the COVID lows. You'll see here that we've got this huge volume shelf. We bounced right off of it. And really this week, all we did was retest this resistance that we broke out of. And we continued higher and almost closed at the high of the week into the close on Friday. So nice bounce off the volume shelf. If we do continue up next week, that 85 level above, kind of that cup, the top of the cup here would be your target. And I'm thinking if we have a strong week in the market, this could definitely be one of the stronger names to watch. And so definitely keep an eye on this. And I do have a position in this, just full disclosure. I've got the November 19th $85 calls. And I personally think it's probably going to test that 85 level maybe next week, but we just have to see how price action plays out from here. Going into another one, DKNG, another betting stock. This is a great case study on using a few oscillators to really nail a bottom. So let's make this chart actually full size, and we'll look at the regular candle, and we will pull up essentially 3 oscillators here below the chart. So anytime you have an oscillator, you can just call it a lower indicator because it's below the price. That's where the lower indicator name comes from. So you've got the RSI, you've got the Williams percent range, and then you have the vortex indicator here. And you can see here that pretty much anytime the RSI became oversold, so you can see all these points here. Now notice here back in May, we were oversold for quite a while, but we did have a pretty strong move up. Once we finally bottomed, you have this here, and then you finally have it here again. Now you'll see here that we already have broken above that 30 mark on the RSI, so that's something to definitely keep in mind. But also notice here that it's kind of in conjunction with the percent range also being oversold. And one of the main things that you wanted to look at last week, this week, on Thursday, if you can see this from Thursday, we closed red on Thursday, but notice here you have an uptick on the percent range. So that is divergence that you really want to pay attention to, and it did prove to be pretty strong divergence and a reversal point into Friday. Now the last one is the vortex indicator. The vortex indicator really measures when trends are changing, and you can see here anytime this vortex negative, which is this red line, is pretty far away from the vortex positive, and you kind of have them diverging. Once they start to converge, that's when you know that you're starting to kind of get a turn in the trend. And also notice that it does trade around some pretty predictable thresholds here. You can see that we were trading within this threshold right around 1.3. And so we had all of these previous signals that were signaling again. So we had the RSI oversold, percent range oversold, vortex indicator diverging like crazy and getting to the top of that threshold here. And so DKNG is another one that you definitely want to keep an eye on going into the week ahead. That's not a financial advice. That's, hey, check out the chart, look at the signal, and then go do your own due diligence and see if this is a trade that makes sense for you. So that is DKNG. No position there. Disney is another one I want to go over. I also don't have a position in this one, but I did want to just quickly go over kind of how these horizontal levels have been playing out. So you can see here that on the daily side of things, we have bounced off this horizontal level multiple times over the last 5 or 6 months. And you can see here on the weekly chart, if we anchor the volume by price from the COVID lows, you'll see here that we do have this volume shelf still playing out. This volume shelf is probably getting very beaten down based on how many times the price has come back to this and just bounced off of it. But all in all, this is an orange highlighted area because we did close a little bit below the point of control. Decent candle, not my favorite setup, but you definitely do have a nice bounce from Friday going into the week ahead. And if the markets are strong, this definitely could be a mover. The main thing to watch is a move above 180 on Disney. Going into Tesla, we got to do Tesla. Everybody watches Tesla. It's always a main requested name. So we talked about Tesla last week. We talked about the ascending triangle. We did get that breakout. We tested that 800 level almost to the penny. And now we're kind of bull flagging into the week ahead. You can see this previous resistance is now acting as support. And then you can also see here that this was the main area that we wanted to close above. And we did break above it. We just did not close above it. And the fact that we have this wick here, this is where you really want to turn on the raindrop chart and see kind of what was going on here. So we do have a green candle, but if you turn on the raindrop chart, we actually have a red raindrop. So you do have a little bit of, you can call it divergence. I like to call it just a discrepancy, meaning you've got a green close on the weekly candle, but you do have the red raindrop. That means that the volume weighted average price for the second half of the week was lower than the first. And that is something to always take note of when you do have a discrepancy between the colors. If you have a green raindrop and a green candle, you're kind of in confluence. But if you have a green candle and a red raindrop, there is reason to be cautious there because both are kind of telling two different stories. So all in all, Tesla, I do like the daily setup. I don't love the weekly raindrop, but as always, we'll let price action decide where we go from here. Next one that we'll look at is NEO. This is one that has been requested quite a bit over the last week, so we'll take a look at this. Not too much going on here, just a perfect rejection at this resistance zone on Friday, and pretty much a hard move down from the open. You can see there's no wick at the top of this candle, meaning that we pretty much opened at the high of the day. Now, going into the weekly chart, you'll see here that we do have this longer term descending triangle here. And if you anchor the volume by price from the COVID, or not the COVID lows, but the October or September 2019 lows, you'll see that there's quite a bit of volume above. That means that we do have quite a bit of supply above to get through before we really can think about a breakout. So for now, this is stuck within this falling wedge. Remember, falling wedges can take a while, especially if you have this much of the falling wedge left. This thing could really just trade to the end of the falling wedge into the rest of October. So we'll just see how this plays out. But, it does look like, or it did look like, that EVs were starting to get maybe a little bit of a bid. We'll have to see how that plays out. Next one, I did want to do CEI just because it's being talked about so much, and kind of go over the thesis on why it really did move last week. So last week, we did have this volume shelf forming. So if you anchor the volume by price from the swing low here, this is where we were going into the week ahead. So we had this candle here. And as always, if you have a wick at the top of the range, you always want to turn on the raindrop and see where is that volume located. Well, in this case, there was quite a bit of volume at the top of the range, which was showing that there was conviction by buyers aggregating or absorbing that supply at the top of the range. And you can see that we did continue up. That 350 PT was hit, and that was simply just a function of these previous highs here. So I just took this previous high, extended it, and you can see we also tested around 325 or so. What was that? This is right around 306. So, it was more of a zone rather than an exact price point, which is always how you want to look at targets and that type of thing. So we did test the top of that target zone. And you can see here now we're just having really, at least at this point, just a pretty decent little pullback. You have to have these types of pullbacks in order to move higher. Now, will we move higher? We'll have to see what happens. But this was just a great recap of what happened last week. Bounce off the volume shelf, straight up to those previous highs, and then a little bit of a pullback. But still a very strong week for CEI. Now, I did want to mention this is an interesting setup as well on the 65-minute candle. So if you look at the 65-minute candle, and we use those same techniques that we just did looking at kind of that swing low, now we're on the 65-minute candle. Remember, you want to use the 65-minute candle because that's essentially 6 even candles for the day. 390, which is how many minutes are in a trading day, divided by 65 is 6. If you're using the 60-minute candle, you have 6.5 candles. So you actually have a candle that is half of a candle when you're looking at the hourly candle. So if we anchor the volume by price from this kind of swing low capitulation point before the reversal, you'll see here that, one, we have quite a bit of volume forming right at this volume shelf. And that essentially means that most of the shares that have been traded since the September 20th low are pretty much trading right at break even. So you've got a lot of shares holding at break even. That creates a base for price. And I also wanted to point out here, if you turn on the gap snake, and we need to make the ATR a little smaller, you'll see here that we do have a gap above. So this is just automatic gap detection. You can see the next gap above is right around 365, let's call it. And so if we do continue up, that is what you want to pay attention to going into the week ahead. But another thing I wanted to point out here is notice all the volume at the top of the range. Even though it's a red candle, if you look at the regular candle, you'll kind of see exactly what we were just looking at on that daily chart from last Friday before the move up. You have the wick here, but you have quite a bit of volume at the top of the range. Now, keep in mind, we do have a green candle and a red raindrop, but a lot of the time I'm more focused on where that volume is located, and most of that volume is located within the wick that we just looked at. So all in all, possibly, a little pullback before the next leg up. We'll just have to see, but on top of the gap above, you'd also want to break above this anchored VWAP from the swing high, and that is right around 365 as well, and that's kind of right in line with the top of that gap. So 365 is the main level above that you want to keep an eye on. Hopefully this weekend video was helpful, getting an idea of where the broad markets are going, crypto, and some individual names going into the week ahead. Remember, this is just analysis, price action, anything can happen. That's why we have to look at price action every day and then kind of look at our thesis and see, has it changed? Is price action still in line with the thesis? And then go from there. So if you like and enjoy these videos, please like and subscribe. We do these every weekend, and we do like to provide some value for you guys using some of the different tools on TrendSpider, such as the raindrops, volume by price, the seasonality, to just get an edge in the market when you are looking at the technical side of things. Everybody have a great weekend, and thanks for watching.